Today I want to take some time to talk about the electric vehicle market. Specifically, we will discuss Tesla's Cybercab announcement, as well as their upcoming earnings announcement on October 23rd, and I want to discuss how this Tesla announcement actually affects companies like Uber, as well as Chinese electric vehicle manufacturer BYD. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. So just a few days ago, Tesla came out and announced their new Cybercab. You can actually see the design here on Tesla's website. It's this goldish looking car right here, and it has a very cool design that stood out to investors and consumers. However, during the announcement, a lot of the timelines really worried investors. The new Cybercab would have unsupervised full self-driving technology, and this would be a big win for Tesla. However, the major concern for investors is around the timeline of this technology and when the Cybercab would be rolled out. Elon Musk during the event said that he hopes to be producing Cybercabs before 2027. The key word in this statement is hopes. This did not create a lot of confidence in investors around when this Cybercab will actually be rolled out. And even something that should be seen as a positive from this event has been flipped around to a negative. They announced that the Cybercab price tag is expected to be under $30,000. However, since the event, a lot of analysts have come out looking at previous rollouts of vehicles from Tesla and projected that the price tag is going to be much higher than $30,000, at least in the initial offering. So with all of these concerns from investors, Tesla's stock price has fallen 12.5% in the last 5 trading days. However, on the flip side of that, companies like Uber and Lyft have seen a boost from this event. Uber specifically is up 16% over the last 5 trading days and saw over a 10% move during Tesla's event. And the reason Uber's stock price moved up so much is because they're actually ahead of the game in terms of autonomous ride hailing. They have partnered with the company Waymo, which is a Google company, to start providing autonomous ride hailing by early 2025 in cities like Austin and Atlanta. And this is obviously a huge threat to Tesla, because if Uber is already partnering with cities and governments to provide autonomous ride hailing, they are much further ahead of Tesla than people are thinking. And what that can ultimately do is it can get consumers used to using Uber's ride hailing versus Tesla's. And Uber's been doing a great job of grabbing more and more market share. Currently, their trailing 12-month revenue is sitting at $40.05 billion. If we go back just a few years ago, they were only bringing in around $10 to $12 billion. And this hasn't just been growth for the sake of growth. Some companies get caught up in constantly trying to grow their top line numbers and not focus enough on their bottom line numbers. Uber in the last year has actually done a great job of focusing more on profitability. Out of their last 5 quarters, they only have one with a negative EPS number, and their trailing 12-month EPS has been consistently profitable over the last year. And they're set to announce their next earnings on October 31st. Analysts are projecting their EPS to come in around 62 cents of positive earnings and revenue to come in at around $11 billion. I definitely think Uber could be the number 1 or number 2 player in autonomous ride hailing. But right now, is the stock a buy? Personally, I don't think so, just because it's trading at a very high valuation. Right now, its trailing PE ratio is sitting at a 92.37. So right now, Tesla has a few different threats to the company. Obviously, Uber presents a threat, but also there's a competition threat with Tesla and their electric vehicles. Their margins, which once were a highlight for Tesla, have been shrinking over the last couple of years. And part of the reason for this margin weakness for Tesla is because of companies like BYD. BYD is the number 1 electric vehicle company in China. And not only that, it's projected that sometime in 2024, BYD is going to overtake Tesla as the number 1 battery electric vehicle manufacturer. BYD is lagging behind Tesla in terms of their revenue. BYD's trailing 12-month revenue is currently sitting around 46, almost $47 billion. Well, Tesla's trailing 12-month revenue is currently sitting at $95.3 billion, so almost double that of BYD. And it's a very similar story in terms of EPS, because BYD's EPS is currently sitting at 58 cents for the trailing 12-month period, while Tesla's trailing 12-month EPS is sitting at $3.55. Tesla does have an earnings announcement here on October 23rd, and they're projected to put up an EPS of 60 cents and a revenue of $25.67 billion. The biggest issue that I've always had with Tesla, and the reason I haven't bought into it, is around its valuation. On a trailing 12-month basis, their PE ratio is sitting at a 61.18, while their forward P ratio is actually higher, coming in at a 71.43. And at some point in the future, I firmly believe that Tesla is going to trade at a valuation of around 25 to 35. What that means is I believe that there's a lot more downside pressure to Tesla stock right now, because even if they come through with the high EPS number in 2025, that would still be a forward P ratio of around a 60. So personally, I do like buying into turnaround plays. I've bought into Alibaba, PayPal, Palantir. Even back in the day when I was buying into Apple, it was even kind of a turnaround play because I was buying in 2018 when there were a lot of concerns around China. However, for Tesla, I would have to see the price go down to around $100 per share. That would get it into that forward P ratio of around a 30 to 35, and that's where I'd start getting interested in buying into the company. I think with a lot of the pressures that we're seeing on the company, with competition coming in, as well as lagging a little bit behind in the robo-taxi market, we could start seeing the stock fall in a major way. But right now, it's just kind of sitting in a middle ground. But let me know your thoughts on Tesla, BYD, and Uber. Do you own any of these companies? Personally, I don't own any of these three companies. I did at one point own Uber in 2020, and then when the stock went up, I sold out of it. So I don't currently hold a position in that, but I've always been interested in trying to get into Tesla. It's just never felt like the right price for me. But with that said, never buy into a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And in the spirit of Halloween, we have another ghost joke. What kind of horse does a ghost ride? Check the comments down below for the answer. Thanks for watching.